From the studios of Farm Journal Broadcast, this is U.S. Farm Report.
Welcome to U.S. Farm Report. I'm Clinton Griffithson for Tyne Morgan, and here's what we're working on for you. The U.S. economy is rolling, so what does it mean for agriculture? In John's world,
income taxes and your church budget.
We're on the road with Machinery Pete in Delaware.
It's hard to be able to have around-the-clock operations when you have the amount of people in our area.
And it's a John Deere Waterloo boy on Tractor Tales.
U.S. Farm Report is brought to you by Chevy Silverado, the most dependable, longest-lasting full-size pickups on the road.
Now for the news that moved the markets this week, and the big news coming from the U.S. economy. U.S. filings for unemployment benefits plummeting to the lowest level in almost 45 years, and that could push the unemployment rate of 4.1% even lower. Experts say it's a sign the job market will tighten further in 2018. Meanwhile, the Dow blowing past 26,000 for the first time ever. It comes just a week after hitting 25,000. Analysts say it's further evidence that the long-running bull market is alive and well. Tax reform, company earnings, good economics data, and investor enthusiasm feeding that bull market. Meanwhile, it was a mixed bag for major grains this week. However, soybeans seeing some green following last week's USDA reports. November 18 beans climbing above $9.90. Nearby cotton futures also higher, now trading past the $83 per hundred mark. Drought and dryness continued to impact wheat markets. Chicago futures getting back within shouting distance of early 2018 highs. Analysts say weather may have an impact moving forward.
Now moving forward here, we do have some U.S. weather issues that should be monitored. It's very, very dry throughout the U.S. southern plains, and we've got a more severe drought in portions of the northern plains, the western parts of North and South Dakota, very, very dry, and that's something that the trade may start to pay more attention to as we get into late winter and early spring.
On the cattle side, the biggest news this week involving meat packer JBS USA. It's planning to sell 5 River cattle feeding to Pinnacle Asset Management for about $200 million. Now, 5 Rivers cattle feeding includes 11 feedlots and has a total feeding capacity estimated at 980,000 head of cattle, making it the largest cattle feeder in the world. Now, as part of the agreement, 5 Rivers will continue to supply cattle to JBS beef processing plants, and if the sale is finalized, it means that none of the 3 largest beef packers, JBS, Tyson Foods, and Cargill, have ownership of a cattle feeding operation. Those are the headlines. Meteorologist Mike Hoffman joins us now with weather. Mike, I know it's winter, but what about a warm-up?
Well, thanks, Clinton. Yeah, it's going to turn warmer in the eastern parts of the country, but if you live out west, it's going the other way. That's kind of typical when this happens. There's a drought monitor. You know, there is a lot more color on this map than we were seeing a year ago. Going back a month, you can see it was well, getting pretty bad around Arkansas and some of the surrounding states. Those areas have actually improved a little bit, but the overall amount of drought has been increasing, basically, from the far southeast through the southern plains into the southwest. It's still lingering in parts of the northern plains in Montana, but not as bad as it's been. This is going to be a stormier week, though, so we may improve some of that. Here's Monday, pretty big storm system close to Iowa, cold front to the south, stationary front to the east. There'll be snow on the cold side of this system, but rain all the way up into the lower Great Lakes, at least to start. And there'll be showers and thunderstorms into the southeast. Next storm system coming in out west. This one will actually weaken, but there's another one lingering that comes eastward later in the week. By Wednesday then, that secondary one coming into the northwest with rain and mountain snows out there throughout the central Rockies westward, and lingering snow showers in the northeast and the eastern Great Lakes as cooler air, but not as cold air, comes into the eastern 2/3 of the country. By Friday then, there's that big storm system again, moving right through the middle of the country. Lots of rain up and down the Mississippi, Tennessee, Ohio River valleys. Snow to the north and west of that as much colder air comes in out west. We'll check your longer range forecast in our next half hour.
All right, thanks, Mike. Now, when we come back, we'll sit down to discuss this mid-January week in commodity markets. Don't go anywhere.
U.S. Farm Report is brought to you by Delaro. New Delaro fungicide for corn and soybeans can help you get the edge you're looking for to achieve personal best yields. Delaro, keep raising the bar.
Welcome back to U.S. Farm Report. Today we have Garrett Toy with Ag Trader Talk and Doug Worling with Bauer Trading. Thank you both for being here. Garrett, we'll start with you. And now that we've had a week to kind of digest these USDA reports, where do you think we sit right now?
Well, the corn market is still set in a sideways range. You look at the key take-home for me was the stocks report, and that the fact that, you know, pretty much the market structure is the same as last year. We have a large spec short, and we have a producer that has a lot of grain sitting on the farm. If there's one difference versus last year, it may be the lack of decrease in wheat acres, which potentially has some implications for the 2018 marketing year. But at this point, you know, with that uncertainty about those acres, we have 30 to 45 days here that, you know, producers need to take advantage of what type of acreage speculation we may see next year to market their a better portion of their old crop grain.
Yeah, we'll see. We do have just a short amount of time to kind of get that done. Doug, as you look at these reports, what about for you this past week? What were you taking away?
Well, there's two big things to just kind of bounce off his corn situation. Is one, he is correct. There is a huge shorts position in that market, and you know, I feel as though with the yield being what it was on that report and stocks, they had every opportunity to really push it lower if they wanted to.
Sure. Right.
That has not been the case. So that is a long-term plus, because if you are net short these markets and you did not just see that happen, you know, what are you waiting for here? No. You may be looking for an opportunity to shift those positions. We saw that this past week. And then, you know, if you look at the global situation, it's very little known that, look, we had a great crop here. We have plenty of stocks. I'm a realist, I get that. Yeah. But, you know, our global corn production this year was 1044. Our global corn consumption was 1066. So we used more than we produced. That's small, but that's a trend I think you're going to see to continue. All
right. So a little bit of a positive there. As you look at the global situation, Garrett, what do you think?
Well, I mean, world stocks are declining. I mean, the U.S. is the residual supplier at this point, and we still have a Brazilian crop to grow and an Argentine crop that's going through pollination here the last 2 weeks through some fairly hot weather. But that's the only thing that we really have is that speculative short here that could potentially be covered. But they have the producer there to sell. So if you look at the cash structure, you look at the people who have been on the show is sell the carry, sell the deferreds. That's been the case the last several years where the producer has waited until July, seen what we've had for a crop, and then we've had a flow of grain that's moved right before harvest that's just collapsed basis into harvest. Well, if producers have sold the carry a little bit more this year, that means that you're probably not going to see much for basis appreciation, if any, out in those deferred slots. And where you're seeing the basis appreciation in the front end is where you got flat price that isn't at attractive levels. So from a producer standpoint, you look at the big picture, you're going to hope for some sort of short cover and rally. You've got crude, you're rallying, you got general commodities, but to this point, the ag markets have been fairly secular to that.
What do you think, Doug? You agree with that?
What he said from a cash front and a domestic front, he's spot on. The broader picture, I think you're slowly starting to turn a ship here, and what I mean by that is, in 2000 when Brazil came on the scene, they grew a 44 million metric ton crop. Last year they grew 110. Well, beans used to be 550. Right. Now they're 950. So we sit there and we look at stocks, and I feel like we fall into this, well, this is what they used to be in the past. You can't look at them the same. Your global demand and the growth that we're going to see over the next couple of years has changed so dramatically that prices are supported at higher levels than they usually were. Now, I'm not sitting there saying things are going to go crazy and be bullish, but yeah, you get hiccups along there. That'll be plenty of opportunity. The market usually gives you one, if not two, pricing opportunities. You need to take advantage of them.
Yeah, Garrett, do you think the lower value of the dollar this week that we've seen is going to continue to drive some of these sales?
It may. I mean, we had fairly strong export sales, but to this point, corn and even soybeans, and that's the driver from China, have been fairly disappointing. To Doug's point is this coming in the January report with a large position, back in my mind, I expected, now that we've got the supply side question answered, that it probably is going to be the highest carryout estimate that we see, if we see better exports, if we see we've got 600 million gallons of ethanol production coming online, a little bit of a disappointment in the feed and residual numbers. It's not going to be a big shift, but if we're going to try to bottom a corn market, we need to get that carryout from quick growing at this point, and we're not there. It's not going to be by leaps and bounds, but if we can stabilize the carryout, see what we look at for acres. We've got flat hard red wheat acres next year, and then we get into the summer weather.
Yeah, well, there's plenty more to talk about as we go through these markets. This has been kind of an interesting January, and I always think January is really interesting. Stick around. We'll be back with more U.S. Farm Report in just a minute.
U.S. Farm Report is brought to you by the LibertyLink system, the simply better solution for a stronger yield and superior weed control from Bayer.
Welcome back to U.S. Farm Report. Garrett Toy, Ag Trader Talk. Doug Whirling, Bauer Trading, our guest here today. All right, Doug, we'll start with you. And as we start to build a picture of what supplies are, what prices are, we're getting a little more indication of what South America is going to do. How does that start to change or influence what farmers in the U.S. do in 2018 come spring?
Well, the interesting dynamic that I think you just saw from that wheat acreage situation from the last report here in January was, it told us that, look, if you're outside the Corn Belt, corn's not $6 anymore. Beans aren't in the teens. So you're looking to diversify. I've heard a lot of milo, I've heard a lot of sorghum. Cotton is going to be a phenomenal growth point for individuals who are still have the ability to expand there.
Right.
That's a market.
And those prices have been strong, sure.
That's a market that had 2 years of less production with increasing demand. So you see a lot of similarities in the other grain markets. It just takes time to get there. So it's not just going to be this corn bean. There's going to be all these other mix outside the Corn Belt that I think may surprise. So you may not have this big shift, as large a shift in bean and corn acres as we're normally used to, because there'll be other things we'll be diversifying into.
Yeah, Garrett, do you think we'll shift out of corn and beans, or will we just take some of those other acres?
You're at least stopping the flow into corn and soybeans.
Okay.
This report this time last year, we had 1 million acres of winter wheat that were either going to go to corn and soybeans. Most likely we don't have that this year. But Doug's exactly right. We've got cotton, you've got sorghum. China's after the sorghum because it's non-GMO. They can get it in. They don't need TRQs. They're importing huge amounts of sorghum. The protein issues on the old crop winter wheat, the hard red spring acres, that you may see some additional shifts there. But the point is, at least you're stopping that flow. 350 corn is stopping that flow into corn. The soybean market, there's the risk, a rally on Argentine weather. We got the $10 new crop here today, an opportunity to market some new crop or hedge some new crop beans. Again, if you haven't had that opportunity, if we get a substantial bean acres, then you're going to have that shift back to the soybean market. And I think the biggest question that you've got right now is where these 90 million acres of beans that we had last year, where are they going to go?
If they go, right?
If they go.
If they go anywhere. So as you start to kind of build out 2018, Doug, and you look at the market dynamic and the world dynamic, what indicators, what are you watching for to say, hey, this is how I'm going to make decisions this year? And obviously weather's always a big one.
Well, if you're talking about grain specific, I look at more broad-based commodities in general for 2018. I think 2017 proved that there's enough demand under these markets when you have really good crops to support prices. And 2018, I think, will be a very good opportunistic opportunity for commodities in general. We have a lower dollar. We're going to have a lot of money flow looking at these things because they have value. And anytime you see the oil market increasing, and that was a 2-year situation that's drawing down stocks globally and domestically, that's a big open for business sign for all commodities in general. And we feel as though the equity markets, you're going to see a lot of that money start coming into commodities. And Goldman Sachs is going heavy commodities. So it's becoming more in vogue is what I'm saying, which is longer term promising for price support and price appreciation outside of fundamentals.
Yeah, do you agree, Garrett?
It's possible. I think they're marketing opportunities. I don't know if it's sustainable or not, given the large supplies. You look at the corn carryout, you look at the soybean carryout, more so the corn carryout. These are levels that we haven't seen in multiple decades. Soybeans are soybeans, though, and if you have a South American weather issue, the month of February is very important for Argentina and Brazil, but they still have large old crop supplies. I mean, you even look at the export program here in the January report. U.S. should be shipping better corn exports than what we should have been. We got better sales numbers today. Brazil isn't shipping as much corn as they are, but it just, when they cut that export number, it went straight to stock. So that grain is sitting down there, waiting for an opportunity like we are as a residual supplier here in the U.S.
Yeah. See, that's where him and I, we agree to disagree in a certain way. Like, I feel as though that we're turning a corner, and you're going to have such good global growth this year that we're going to continue to draw these stocks down. I mean, by 2022, India is going to outpace China in population. So more money, more middle class income, more consumption base, and that is price supportive. Right. So hiccups will give you plenty of opportunities. I don't disagree with him on that. And people need to take advantage of that, sell and defend strategies, have things in place, know what your targets are.
Yep. All right. Thank you both for being here. We're going to get your final thoughts and some tips for moving through 2018 when we come back. We'll have more U.S. Farm Report in just a second.
U.S. Farm Report is brought to you by Corvus Pre-Emergence Corn Herbicide from Bayer, the only herbicide to offer 3 levels of defense against weeds: burn down, residual, and activation with rain.
Welcome back to U.S. Farm Report. Finishing up with markets now. Doug, go ahead.
Well, this energy market and the components there are pretty interesting. We've had crude oil stocks actually decline every month since this time last year, and that's with increasing shale production and rig counts. It tells you that global consumption and domestic consumption is increasing. I think that if you get a big dip in gasoline, that's going to be an opportunity to be pricing some diesel fuel, because this summer, as you can already see now with truck traffic, it's going to be not as cheap as it is. It's going to be a pretty dynamic situation.
Good. Garrett?
We hit $10 Nova beans this week. New crop, knowing last year's highs were around 10.20. If we get an opportunity to mark it up against those levels, we'd be looking at hedging some new crop beans. New crop corn, we're still stuck in this range. It doesn't look like we're getting an opportunity to get some $4 new crop sales on if you didn't sell last summer. But I would be, any opportunity in the next 30, 45 days, we'd be looking to get some new crop hedges on.
All right, thank you both for being here on U.S. Farm Report. Really appreciate your insights. And we'll be back with John Phipps right after this. Well, the recent tax changes from Washington seem to be enticing some businesses to action, like Apple just announcing this week it plans to reinvest overseas dollars back here into the U.S. based on that bill. Others may have a different experience. Here's John Phipps from the farm.
While farmers are still trying to sort out the remarkable legislative blunder that, if uncorrected, could obliterate their tax liabilities, there is another less publicized but still consequential change. In an effort to reform and simplify that arguably came up short of that goal, lawmakers decided to increase the standard deduction and change other popular deductions at the same time. One of those that is being changed is the charitable giving deduction. Now, the details about this are just about as exciting as you might expect, but experts think the change will significantly alter charitable giving. I agree. Oddly enough, the greatest impact of this change seems to fall on middle-class taxpayers with somewhere between $50,000 to $200,000 of income. While our primary motive for giving to charity may not be based solely on taxes, some research suggests that donating before tax dollars did affect how much we gave. Indeed, almost all charity solicitations highlight the fact that your contribution is tax deductible. It's also common to hear comments like, well, I'd rather give it to the church than the government anyway. With this change, that feature won't mean as much to as many people. Tax analysts expect only about 5% of filers to itemize deductions now, and that's down from about 30%. This has many religious and secular organizations that depend on middle-class giving worried. Coupled with changes to the estate tax, fewer income dollars will be subject to taxation. Of course, many think that's a good thing. Lower taxes means more dollars that people can give, if you are motivated to. But the absence of tax deductibility for many donors now presents charities with a serious education challenge at the very least. Nobody knows how much this will affect charitable giving, or if the giving will kind of stabilize back at the same level. Some experts believe giving could drop by as much as $13 billion annually, or about 8%. which is significant. But one thing is clear. Taxes influence our economic choices. Charities that have relied upon this tax break to encourage contributions from the middle class, like estate planners who have relied upon higher estate taxes, are in for a big time of change.
Perspective from John Phipps. Thanks, John. Well, still to come, we'll check in with a top producer as he builds a future with family and organic farming. Plus, we're on the road with Machinery Pete to Delaware.
U.S. Farm Report is produced and distributed by Farm Journal Broadcast. From the studios of Farm Journal Broadcast, this is U.S. Farm Report.
Welcome back to U.S. Farm Report. I'm Clinton Griffiths. Here's what's coming up in this half hour. A farm economy update. Rural bankers weigh in. Growing in organics, a top producer making his mark beyond conventional corn. And diversity drivers. Machinery Pete shows us how alternative crops are driving equipment sales back east. Now for the headlines. The latest rural Main Street Index raising caution flags from bankers. The January Creighton University survey of bankers in 10 rural states showing the overall index sinking again this month, remaining below growth neutral, although it was higher than January of last year. Those banks are now citing farm loan defaults as a concern. 40% of bank leaders say defaults are now the greatest challenge for 2018. More than 7 in 10 bankers say ending NAFTA would have a negative impact on their economic area. And speaking of NAFTA, Canada set to host the 6th and potentially make-or-break round of NAFTA talks next week in Montreal. President Trump softening his stance on the trade deal this week, even suggesting the deadline for finalizing negotiations may have to wait until after the Mexican presidential election. An ag official from Canada says trying to keep up with U.S. attitudes about NAFTA is like following a pinball. Also on the trade front, Brazil may be considering dropping its 20% import duty on U.S. ethanol. The news coming from recent comments made by the Brazilian ag minister, who linked that decision to ban imports of fresh Brazilian beef. The Brazilian minister is saying, quote, "There is on the part of the U.S. a big demand to withdraw the ethanol tariff, and we also have this problem with beef. Obviously, one thing influences and contaminates the other." That's it for news. Meteorologist Mike Hoffman joining us once again. Mike, how is winter precipitation stacking up thus far?
Well, Clinton, I think it's been a drier winter than normal, which is typical La Nina for the southern tier of states, but not so much farther north. This is a different week, though. We see two big systems coming east. First one showing up in the jet stream already coming through the west. On Monday and Tuesday, that moves through the center and the eastern, northeastern especially, parts of the country. Wednesday, then a quick shot of colder air, but not as cold as we've seen most of this winter, comes into the Great Lakes, northern plains, and the northeast. Next storm system then comes in later in the week, coming through. The trough will be in the Rockies, but the storm system itself out in the plain states, and this will be a big wet one as well. So that could change things a little bit. That will continue to move east through next weekend. So my 30-day outlook for temperatures, I'm going below normal from Missouri northward basically. Above normal the far southeast, southern Texas, most of the southwest. Precipitation over the next 30 days from Louisiana into the Great Lakes. Above normal northwest, below normal southwest and southeast.
Thanks, Mike. The Humane Society of the United States says it's suing USDA for dropping the organic livestock rule. The final rule was scheduled to be finalized last month. It covered standards for organic milk, meat, and eggs. The animal activist group says withdrawing this rule threatens to erode the integrity of the organic seal. Now, the latest USDA data shows double-digit growth in organic production. Organic sales now account for more than 4% of total U.S. food sales. Betsy Gibbon introduces us to a Wisconsin farmer who changed his mind and turned to organic production 30 years ago before organic became mainstream.
As Randy Hughes takes a walk through his shop.
These are the new brackets that they put on, the big ones.
He has 2 more employees at his side, a team he thought would be tough to recruit.
They came back and maybe part of it was they thought they'd just give it a try.
They include his son Willie and daughter Julianne. The duo came back to the farm after pursuing other careers.
I think when I graduated in 2009, I took a look at what I wanted to do, and coming back home just kind of felt right.
I grew up around that and I missed being around the family team, and that's really where my heart was.
And I really didn't think that 10 years ago. Neither one of them had shown much interest.
Randy is used to change over the years. As a young farmer, he longed to make money by growing enough corn to control the Board of Trade.
Yeah, what a dreamer. Yeah, that's right. Well, that would take that would take a lot of corn to do that.
His priorities changed when he got sick of competing with every corn planter in the U.S. He took one love and traded it in for a new challenge, searching out a niche that's paid off as he focuses on quality instead of quantity.
I'm fortunate that I was able to ride on the coattails of the organic industry, which has done well. So the acres that we have in organics now are probably some of our more profitable acres. They're the riskier acres. You get a big goose egg on them sometimes, but they certainly are a lot more fun to grow.
Randy made a leap into the organic industry and was certified in the early 1990s. Almost 30 years later, he grows 5,000 acres of non-GMO crops, both organic and conventional.
We don't grow anything we don't grow any number 2 yellow corn.
He may be most well known for a blue corn variety, which put him in the black, and still does today.
We still grow blue corn probably every other year or so because we grow enough in 1 year to last the chip business for that period for 2 years. What we're doing is we're taking the corn and we take it to a place that processes it, stores it, and then makes the chips out of it.
Like the market, the operation has changed. Growing demand makes the crops easier to market, and premiums are even sweeter.
Where before we always had to haul it away, you had to make a lot of phone calls and try hard to market it. It's not so hard to get rid of now.
Perhaps the growth Randy is most proud of is the return of his kids.
And I don't know that there's a brighter spot in my whole life than that. I'm choking up on this one. To come to work every day and to have your kids there, and I've got a grandson that shows up every day. Doesn't help much, but he shows up. It is just wonderful. I can't tell you how happy I am about that.
Reporting in Janesville, Wisconsin, I'm Betsy Gibbon.
Thanks, Betsy. Randy Hughes was a finalist for Top Producer of the Year several seasons back, and we're preparing to do that again next week. Top Producer Seminar, including announcing the 2018 Top Producer of the Year, kicks off in Chicago. Tyne Morgan will also be on hand shooting next week's marketing roundtables. Our very own top producer, John Phipps, is next.
1 dream, 2 prizes, 3 fields. Show us your farm and you could win a $10,000 donation for your community, plus a dream sports trip for you. To enter, visit powertodomore.com. Sponsored by Resicor Herbicide.
Your call is very important to us. Please hold.
You know, John recently lamented his lack of branded clothing at chore time, and apparently it struck a nerve. Here's John.
I received some thoughtful and sympathetic messages regarding my lack of branded work clothing, like this one from Dennis Elliott in Henderson, Kentucky. I had to laugh Saturday morning while watching USFR. On Friday, I had to break down and order me a coat online. It's very much like the one you were wearing. I too am a mature farmer. I used to receive jackets, caps, gloves, etc. with every order of seed, chemicals of all brands. I had no idea what a coat actually cost. Well, we do seem to have developed an unhealthy dependence on freebie clothing, and going cold turkey is, well, cold. But not as cold as this one from Jerry Coker in Colfax, Washington. I watched your talk on not having a chore jacket and having to go buy a new one. When I enlisted in the Air Force, of course I left most of my clothes at home. A year later, when I came home on leave, I went to the closet to get my civvies, and I found that my dad had worn them out. I am bigger than him, so he used my clothes as a second layer when it was cold. I had to go to town and buy new clothes so I did not have to wear my uniforms while on leave. Thanks for the memories. Boy, dads, they are the worst. Except maybe for this loyal viewer, Marty Wittig. Okay, your farm jacket comments have to be the funniest of all your comments. I almost feel bad enough to ship you one of mine. Almost. Well, luckily for him, Marty got his mug a long time ago. But Dennis and Jerry will soon be sipping from this priceless USFR collectible. My thanks to all those gentlemen for their kind thoughts.
All right, thanks, John. We'll head out on the road with Machinery Pete next.
Your next piece of equipment is on MachineryPete.com. Search equipment from dealerships across the country to find what you're looking for. Only on MachineryPete.com.
On the Road with Machinery Pete is brought to you by John Deere. Nothing runs like a deer.
As we head into the new year, Machinery Pete is watching the momentum continue from a strong finish in 2017. This week, Tyne Morgan is on the road with Machinery Pete in Delaware, where the need to be diverse is driving equipment trends for Atlantic Tractor Company.
Open the door to this Delaware operation and get a taste of farming in Delmarva.
Diversity has been our key.
And for TJ Schiff, it's diversity that's paying off.
We operate a country elevator, farm, corn, soybeans, wheat, and barley, run a feedlot, and diversified into residential housing.
While it's diversity helping him weather the financial headwinds, big yields in 2017 are also providing some financial cushion.
We had a super soybean crop, and that brought cash flow to farmers that was really a little bit of an unknown of where it was going to come from.
It's the bustle of trucks moving grain in and out that's proof demand in this area is strong.
Pretty much all of our corn, which we're a big corn growing area, goes to the poultry industry.
Solid demand is helping basis, but farming in this area isn't easy. And the biggest challenge is the size of farm fields.
I would think you could easily say our average field size is 30 to 40 acres, 50 acres.
Schiff says it's not just the size of the fields, but trying to move from one farm to the next that creates chaos.
It's hard to be efficient here. It's hard to be able to have around-the-clock operations when you have the amount of people in our area.
It's the need to cover a variety of acres spanning over several miles, creating demand for large horsepower tractors.
I think the 8000 series tractors have brought a lot of versatility. On some days they can do the small job, and on other days they can do the big job.
It's that type of equipment driving business for Atlantic Tractor Company.
Large row crop tractors for us is it's critical. We like 300 horsepower row crops.
The dealership's footprint expands into Maryland and New Jersey, an area that supports a poultry industry always hungry for feed.
Row crop tractors is always the sexy piece of equipment, you know. For us in this region, we use row crop tractors 12 months a year.
The need for larger equipment hasn't changed, but how often a customer upgrades has evolved.
For customers that were trading combines every year or every 2 years, they're used to 1,000 or less hour combine. Now they've run them for 3 or 4 years and they're in the 2,000 hour range. Those customers now would start thinking about upgrading either to a lower hour used one, or they would want to get back in the new cycle to get those hours back down.
He says that could spur a 10% increase in purchases of larger machines this year.
Demand was good. We saw 2017 was a good year coming out of the previous couple years. Saw a big push on used equipment towards the end of 2017 for us.
It's the surprisingly strong finish to 2017 that has the interest of Machinery Pete.
The one thing I'm wondering about is if and when the price of corn does go up just a little bit, it's almost like we've set this pressure valve to pop, and that'll be new sales and used sales. So until that happens, it's still a great opportunity to upgrade, I think.
Search traffic for planters on MachineryPete.com was up 25% in November and December, and Machinery Pete says it's still a good time to buy.
Still planters, a little bit used planters. There's a lot of them out there. Values are a little bit softer, although I would say December picked up a little bit. And a large tillage. You get up over 50 foot, the discs, the rippers. There's some really good buying opportunities there.
Technology is a major piece. I didn't visualize what technology was going to do for us 10 years ago. I really thought technology was going to be for other parts of the country, but it's amazing how we've become dependent on it.
He says area farmers have invested in the technology and infrastructure needed to raise the bar on growing crops.
And that's why you've seen there's a lot of irrigation that's been put in. because we need those 270s. We've got to count on the 270s. We've got to be able to sell that 270 a year before we produce it. We can't wait to see what the yield is to market the crop.
It's not just managing for higher yields driving decisions, it's also increased regulations when farming near the Chesapeake Bay.
Field management is critical. Nutrient management is critical. Application passes is critical. Site-specific farming for us. We have varying soil conditions. We have a variety of pH.
While the concerns about runoff into the watershed are still high, Schiff says technology is making farming easier.
I think we're learning how to satisfy what they want accomplished and still turn it into a big crop. Before technology, we anticipated them just keeping a lid on our yields. I think with technology, we're removing that lid.
While the story of 2018 is still unwritten, used values continue to find solid ground.
I think we're 2 years into used values stabilizing. I would say probably a continuation of that. Maybe we tend to see in the middle of the year from about St. Patrick's Day through October, values tend to weaken a little bit. So if you're looking to buy, that would be maybe the time to do it.
And that's creating a better outlook for equipment dealers.
You know, again, a big push on the technologies that we see, you know, integrating more and more farmer customers, hearing from their neighbors that may be on the leading edge using some of this stuff, wanting to adopt some of these practices into their own operation.
Producers like Schiff in the East are ready to take 2018 head on.
I see, both as a grain buyer and as a producer, we're having opportunities to lock in grain prices that work. They either guarantee a break even or a profit. So I think if the guys know their true costs and know when they're ready to sell based on their financial situation, there's opportunity there. I'm not scared of 18.
Opportunity that's creating an optimistic outlook in the new year. Reporting for U.S. Farm Report, I'm Tyne Morgan.
Next month, Tyne and Machinery Pete are on the road in Higginsville, Missouri. All right, when we come back, Tractor Tales. Stay with us.
Tractor Tales is brought to you by John Deere. Where can you find the most comprehensive inventory of John Deere certified pre-owned tractors, combines, and sprayers? MachineFinder.com. Sometimes the best new addition to your fleet isn't new.
Hey folks, welcome back to Tractor Tales. This week we're in Hobbs, Maryland, and we're here with Bill Tower. And Bill, you've got something pretty special here. Why don't you tell us about it?
Well, we finally bought a Waterloo boy. I never thought I'd ever be able to own one. But we bought it at a sale in Boaz, Kentucky in November the 4th. There was a Joe Ben Wilson auction, and we bought it there, and I'm happy with it.
Have you had it home here for a little while, or just
We've had it home here since the first part of November. We had it in 5 Christmas parades, and we've got to get it painted, but it's in good shape.
You've been busy.
Yeah.
And now, in particular, the Waterloo boy, Bill, with the 100-year anniversary, was that important to you when you were buying it? Did that mean something?
Yeah, it did, but it was just the fact that I had the opportunity to buy a Waterloo boy. I've always wanted one, and now I own one.
Now, you say always wanted one. You, I understand, Bill, just began collecting what?
2004.
Okay.
And that's when I started reading the history of John Deere and realized that the Waterloo boy was the foundation of the 2-cylinder engines. Okay. My mother always said the first words I ever spoke was John Deere.
Well, why do you suppose, Bill? What was it about John Deere that always...
I just like the sound of the old John Deeres.
Going into the auction, were you determined to get it at any price, or did you have a...
No, I had a limit, and they about reached it.
And how did you feel when you got it home and got to see it in person here?
I was just elated. I was happy.
And you were saying the Waterloo boy was one you'd always had your eye on wanting to add to the...
Always wanted to add one to the collection. Never thought I'd be able to.
What kind of reaction do you get when people see it?
We've had a lot of reaction to it, and we actually, out of 5 parades, we won 4 first place trophies with it.
Wow, 4 blue ribbons in 2 months. That's pretty good. Pretty good stuff.
Yeah, yeah. I'm looking forward to this summer taking it to the Delaware State Fair and all the steam shows in the area.
All right, thanks, Greg. We'll wrap up with our From the Farm photos and a last look at weather. Stay with us. Welcome back to U.S. Farm Report. Now, Mike, it was cold last week and cold in places in a lot of areas. It just doesn't get that cold.
Yeah, that's true. That blast of Arctic air pushing deep into the south. Temperatures were 17 degrees in Dallas early Wednesday, 21 in New Orleans. National Weather Service says readings across the South were colder than in New York and Boston at that point. The temperatures put some citrus crops at risk and forced poultry growers to boost energy use to keep housing warm. A Bloomberg report says the amount of natural gas burned for power in the region jumped by 25%.
And Mike, as you mentioned, many places receive snow, although not always as much as the models predict. We got this photo off of Twitter from Lindsay Kimbrell in northern Texas. She says, hey, don't worry about them. They'll survive the snow of 2018. I think you can see just a tinge of white there in the grass.
Real close, though.
Yeah, right there in the grass at their house. Now, if you have a picture or video you'd like to send in, please send those to mailbag@usfarmreport.com or check us out on Facebook and Twitter. And Mike, hopefully it warms up a little bit this week.
Yeah, it's looking warmer from coast to coast, actually, compared to what we've seen.
All right, I'll take it. Thank you for joining us here on U.S. Farm Report. I'm Clinton Griffiths. Tyne Morgan will be back next week. Thanks for watching. Have a great weekend in farm country.
U.S. Farm Report has been brought to you by Ram Commercial, America's longest-lasting heavy-duty pickups. U.S. Farm Report is produced and distributed by Farm Journal Broadcast.